This is Make It Simple by FSDH, where we simplify everything business and money.
Thank you very much, Akim, for this opportunity. I'm not sure there is any topic that is more discussed globally today in finance or in economics than tariff, for obvious reasons, because of the importance of that subject to the world economy and trade. But I just want to ask you, why should Africa, and particularly in Nigeria, why should we, look at what is going on in the US and other developed countries, in China and in Europe, and then the rest of the world?
Okay, so thanks. I think that's a very brilliant question, because if you think about how interconnected the world is today, gone are the days when the fact that something is happening in America, right, or China, Nigeria will say, oh, we're insulated. Today, things are very connected. With advancement in technology and all of the innovation that have happened, you see that things are moving very quickly. So the fact that this tariff has been introduced in the US is already affecting folks in Nigeria. There's better information symmetry, I would say, among investors around the world. So irrespective of your geographical location, you are impacted by whatever it is that is going on. So back to maybe the tariff itself. As you know, Nigeria is highly dependent on crude oil. Our crude oil earnings, maybe constitute 85-90% of our FX earnings as a country. Anything that sort of impacts that, impacts us as a people. So we need to be worried about what is happening, because that would ultimately might impact on demand for oil and even on commodity prices generally. So a number of African countries, because Africa is rich in natural resources, so there are a lot of commodities going out of Africa to the rest of the world. Any form of disruption like what we are currently seeing now would impact all these countries in Africa. So we need to pay attention to what is going on and see how that then impacts on our different economies. A lot of these countries are dependent on proceeds from sale of those commodities. We are importing quite a number of things from the rest of the world. So anything that disrupts the globalized supply chain, ultimately will impact us, and that's something African countries need to pay attention to at this point in time.
Now, the World Trade Organization, the Director General, Dr. Iwela Konjo, mentioned about alternative, resolution to the current issues. Are there things that you think that could be done that will not really have so much negative impact on supply chain, global trade, as we are seeing today? There has been massive sell-off on equities around the world, and particularly starting from the US, China, and the Eurozone. Also, the last few weeks, we've seen bond yield also going up because there has been massive sell-off, which people are thinking about maybe an indication that may likely lead to a recession. We've seen gold prices attaining all-time high. So, but are there ways you think these issues, these conversations could be managed better to have minimal impact on the world economy? People are discussing now that nobody gain when it comes to trade war is already turning into a trade war. But what do you think that people, the major actors in this tariff issue can do to ensure that we don't have a disruption to global trade and global economy?
I think one thing is certain, at the end of all of this, the world will never remain the same, because we're already seeing different coalitions happening. Alliances are already being formed. The BRICS countries are already looking at alternatives. So they're saying, why do we need to rely on the US, or why does US think they have so much power to be able to interrupt things the way we're currently witnessing? So I think the other day the Chinese president was on the roadshow visiting different countries like Vietnam, Venezuela, and co. These are people who naturally trade with the US and supply a number of things to the United States. Now, China is already reaching out to these countries, and as you're aware, when trade agreements are signed, these are not 1 year, 2 year type agreements. They are multi-year, 10 years, 20 years type agreement. And because those are being done now, even if this US turns around, right, except if they do that very quickly. So we are on a 90-day pause of all of this. If they are able to resolve it before maybe the end of that, the 90 days, and some people haven't gotten to sign agreements with other countries, then maybe. Otherwise, the US will be, inadvertently isolating itself from the rest of the world. Like you rightly mentioned, trade wars don't, no one benefits from it. And some of these things that the US is doing is actually goes against some of the things that they've sold to the rest of the world over the years around globalization, how it's good and all. And I don't even think that they are going to be able to achieve that, very quickly. If you think about it, the manufacturing capacity that China has built, maybe was built over the last 40, 50 years, right? Whoever is going to start something now will probably take, let's say, okay, technologies have improved and all, maybe it will take them some 20, 30 years to get to China's sort of level. So it's a good thing that, right, that even President Trump is already sort of tracing his steps. He's already meeting with different parties, American business owners, etc. And it looks like he's starting to listen. So he's ready to negotiate. Maybe, like someone said the other day, this probably is a negotiation tactic. Take it very high so that when you guys come together, you agree at the level where, and there's absolutely nothing wrong with a country wanting to improve its balance of trade, which is, at the end of the day, that's what the US is trying to do. Right? But I think it's the way and manner it is being pushed. That's what is leading to all of this, crisis. Like you mentioned earlier, we've seen massive declines in equities, bond market, and that is even impacting a place like Nigeria. But the central bank on their own part have actually done very well, and I think once in a while we should be giving.
Okay, sorry to pause you.
Yeah.
We will come back to African in details and Nigeria in particular to know what the fiscal authorities, the government, and even the central bank should be doing in response to this to ameliorate the negative impact of this. So, in your own view, it's like you think that these all issues will be resolved within the next 90 days.
I'm hopeful.
Okay.
I'm hopeful. Yeah.
Okay. So. Now, you talked about Africa, that we have a lot of resources, agricultural input, and even not agricultural input only, but natural resources. Now, what lessons do you think that African continent, as a continent, can learn from all the things that are going on? I mean, you also talked about the fact that China has built a lot of capacities in terms of manufacturing, not only in that environment view, but rather in terms of even the fact that the scale they have. I remember I listened to the MD of Apple, CEO of Apple, sometime talking about the fact that the kind of technical skill they require, there is no country in the world that has it as many as China has. But so they've really built those capacities. So what do we think that we can also do in Africa to actually leverage on the natural endowments that we have to also accelerate our own growth? Because, like you rightly said, President Trump is also thinking about its own agenda, make America great again. How can we create jobs? How can we ensure that we reduce trade deficit? Yes, the approach, a lot of people may not agree with the way it's going to. But for me, it's about what lessons can we learn in Africa, first and foremost, before we go back into Nigeria and thinking about the policies.
I think one of the things that we need to do very quickly, and I know, we've been hearing this maybe since we were born or since we started to understand some of these things, is that Africa needs to look inwards, right? We need to trade better with ourselves. The governments have come together, and the AfCFTA, that's the Africa Continental Free Trade Agreement, is currently being signed, it's being worked on. I think it's something that needs to be accelerated, because at a time like this, when there's disruption globally, if you had an arrangement internally whereby things move freely. So one of the things that I think the ECOWAS leaders have done is the visa-free movement, for example, within West Africa. Can we then see this extended to the whole of Africa? Because you need to be able to move people and goods freely within Africa. Someone was saying, I think it was Dangote the other day, that was saying that it's easier for a French citizen to get into some African countries that himself. Now, if Dangote is complaining, you can imagine what is happening to the SMEs that we are all supposed to be supporting, to grow. So I think that's one thing that we need to quickly, try and accelerate. There also needs to be harmonization of, again, maybe this is also in line with the Continental Free Trade arrangement. We also need to harmonize customs. You need to modernize it, make it easy for people to be able to move goods from anywhere. So if I'm importing if I live in Sokoto, for example, and I'm importing something from the US, there's no need shipping those goods to Lagos. I can just ship it to maybe some ports in Nigeria or something. That then means that thing can deliver to me in a few hours in Sokoto because of proximity to that place. And if you take out all of these other, bottlenecks that just feed all over the place, we'll be able to do better. Then also, another point to also make, maybe before I maybe stop, is that Africa also needs to think about how we are feeding our people. Right? Today, we import a lot from countries like China, the EU, etc. We need to start to build manufacturing capacity in Africa, such that when you have this sort of disruptions, people won't be as impacted as we will be today if all of this continues. Because if China is not able to sell into some of these markets, those goods are going to end up somewhere. And the last thing we want is for China to start dumping goods in our markets. It's not going to be good for a lot of manufacturers who are manufacturing locally in Nigeria.
Thank you very much for that last point that you made. I was going to get there. If the restrictions continues, American is not able to buy a lot of things from China. China seems to be an export-led economy. They will look for alternative market, and you rightly said it earlier that you are discussing with other, neighboring countries and other regions. They will also want to look at Nigeria. And over the years, they've forged a lot of alliances across the globe. So, for Africa as a continent, how quick do you think that we need to respond so that the continent does not become a dumping ground for some of the things that they are producing? Because look, I feel that I share your optimism that the issue will be resolved in the next few months. But if it lingers beyond what we think, there are built up of inventory that they will need to sell, and so that they can produce goods, not to lay off people. They want to be looking at Africa. If we're not producing more, they want to dump it here at a lower price, even beyond, lower than what they are selling in their local market. So what do we think we need to do quickly in the next few months so that African continent does not become a dumping ground for those goods that they are not able to sell in China?
So unfortunately, right, it's already too late, because we should have done some things before now. But we're already here. So one of the things that I think we probably need to do, and on our own side, we have a very large population that is working, I think, in our favor. But the governments also then need to start to think about, how do they protect local industries? So, for example, do we also want to introduce some form of tariff also? Because at the end of the day, this game of tariff, why do countries impose tariffs? One of them is to be able to protect your local industries, right? Apart from the fact that you can make money off it and also balance your trade with other countries. So do we also then want to start to think about, imposing some form of tariff, higher than where we are today for some industries? We can select industries that we think for those areas where we don't have capacity at all to manufacture, right? And we have a need. It's probably beneficial for the populace, right? But for those where we think we have some form of manufacturing going on, those are the companies that need to be protected, because once all of these issues is resolved, these guys are going to take those products back to those markets. So the government needs to find a way to protect the local industries.
I will go further in that line, but in a very different manner in this instance. You've talked about huge manufacturing capacities, and you talked about the fact that we have natural endowment, natural resources that we have in this place. And we've seen a lot of countries around the world, in China, even US, and European countries, come to Nigeria to take raw materials out. Do you think this is the best time for us to do? What do you think government needs to do to ensure that rather than selling out, raw materials they then need to come and start industries here. I can mention lithium that is used for battery production.
Yeah.
And there is a talk about electric vehicle globally now going up. That's very massive for us, and we have very good quality in Nigeria here. So what do you think that needs to be done quickly to ensure that we stop selling out raw materials, but even if it's for us to have semi-finished or finished goods, to attract firms to come out, set up industries here to create jobs, accelerate economic development and growth here?
I think you sort of said it. The government needs to, find a way to develop programs to attract those investments into Nigeria. They need to incentivize those guys who are coming to set up here, because really, at the end of the day, if you have those manufacturing happening here today, okay, you are going to create jobs, locally. You are also going to earn this scarce foreign exchange. You are going to attract FDIs today. They're even going forward. They're also going to, because it will also then open up Nigeria to the rest of the world. Because like you rightly mentioned, with renewables, being at the forefront of what everyone is doing now, countries will have ability. Or like in our own case, we're lucky that we have those lithium reserves in Nigeria. Countries who have those abilities are the ones that that will really benefit from. So the government needs to be deliberate about it. It's not one of those things where it just license people to be able to go and extract the raw materials and ship abroad. You need to find a way to discourage that, either by imposing higher duties or something on people who are just exporting the raw material, and lower it for people who are exporting finished goods. So that way, people have an incentive to be able to say, okay, we want to manufacture in Nigeria, because there are several things will benefit from it. They'll pay more taxes, they'll create jobs for our people, and those products, ultimately, if they are being used in the local market, will be cheaper in the local market than if they are imported, for example, and we've had to pay maybe additional tariffs on them on the way in.
I think you touch on the next point I want to make.
Yeah.
Attracting foreign investors and also supporting the local investors who are already here. Is government doing enough? And not only in Nigeria specifically, but maybe in general for Africa, to ensure that we also continue to encourage the people who are investing, who have invested a lot of their monies here, and also bring in new investors into the country.
So the government is not, they're trying, but I think they can do way better than they're doing right now. Because when I say better, government needs to support industries with infrastructure. So if you use Nigeria as an example, with the incessant power cuts, right? That sort of investment must be led by government. Private people are setting up small power generation plants for their own particular business, but really they can avoid those sort of expenses if the public grid was really working the way it should. So those are the things that the government needs to be able to do. Like I also said, they need to incentivize people. There are some new industries. So lithium, for example, is one of the things that has been a focus area. Now, if you're putting that on the table, the government needs to now start to look at what are the tax incentives that we can give to people who are investing in this sort of area. Tax holidays and all of that. I know there's something in place around pioneer status, right? How do we then even make it more attractive for people to be able to say, okay, yeah, this is something that we need to do, rather than take the lithium and ship it to China? Can we just do the manufacturing here? It might not be finished, maybe some semi-finished or something. But those are the sort of things that the government needs to push very hard, so that way, we will be preparing ourselves for some other crisis that will happen in the future. Because right now, unfortunately, for Nigeria and even the rest of Africa, we really don't have a choice than to feel the full brunt of whatever the impacts of this tariff increase.
I'm going to talk about the role of banks or financial institutions in what is going on in terms of providing financing opportunities to accelerate growth in the real sector. And it's like the central bank saw some of these things coming with the announcement of recapitalization for Nigerian banks. So what do you think the Nigerian banks or the Nigerian banking industry is well positioned to take advantage of the opportunities that might come to Nigeria or perhaps Africa in the changing world that we are seeing?
I think there's some work that has been done to to prepare the Nigerian banks to be able to take advantage of what is going on now and support the real sector in driving manufacturing, in Nigeria and even the rest of Africa. But I think, like you rightly mentioned, the recent recapitalization, the current recapitalization exercise that is currently ongoing would also even increase the bank's capacity to be able to do this. Nigerian banks over the years have built up relationship with a lot of international banks, so we do have trade limits with banks around the world that allows you to be able to, fund your LCs for whatever equipment you need to bring into the country. Expertise have also been developed over the years.
I think you hit the nail on the head in terms of what Central Bank is doing and, recapitalizing it. And of course, when the current administration came on board, they are looking at $1 trillion economy. And well, everything is working along that line to see how we can do that. You are an executive director in FSDH Merchant Bank. What, in specific terms, or maybe general terms, are you doing, is the bank doing to ensure that we also contribute more to the economic growth and development, if you say it that way? And then what opportunities do you see in the emerging economy?
I've been expecting that question, right? One of the things that we've done very well at FSDH, I would say, is that we continue to innovate, in line with market dictates or what our customers are asking for. So I'll give you an example. In the last 3-4 years, as a bank, we've actually gone into new segments of the market. We created new business areas where we're supporting healthcare, for example, business banking that looks after, the smaller corporates. We've gone into agriculture where we're supporting agricultural exporters who are exporting products out of Nigeria. So the question is then, how do we take it from where we are now, where, for some of those are agricultural exporters who are exporting raw materials, how do we support them to start to do some manufacturing in Nigeria? Because again, if you take out, I'll just pick with one product, take out cashew out of Nigeria raw and you send it to Vietnam or something like that, they are going to go there, polish it up, clean it up and package it. These products are going to the US market, but some of them are still coming back to the Nigerian market. So the jobs that we'll have created in Nigeria, we've exported those jobs and we're then buying products here, and our people are spending, and that's all of these things will contribute to raising inflation and and stuff like that. So I think we just need to continue to push these sort of ideas. As a bank, like I mentioned, we're already supporting some of our clients to be able in achieving this, but we can do more. We have banking partners that we're working with around the world, our offshore correspondent banks that support some of these initiatives, and it's something that we want to continue to push.
With interest rates rising in the US, with all the bond yield and sell-off in the short term, what do you think is the outlook on capital flow for Nigeria and the rest of Africa in the next few months?
I think, and we actually saw it in the last few weeks with the tariff increase. We saw a lot of, and this sort of happens naturally when there's pressure, the capital will naturally find their way back to the safe haven. So I think you mentioned earlier the sort of increase in prices we saw for gold and how even the US dollar has benefited from all of this. At times like this, capital will fly out of a lot of these other locations and flow to the more advanced economies, the US in particular. So for Africa, and maybe Nigeria specifically, we probably will not see as much capital coming this way. However, that will also then depend on what our own government, our own central bank does, right? Before now, one of the things that we're thinking about is, given how inflation has sort of eased, that maybe when the MPC meets next month in May, that they will probably start to consider cutting rates. But it's unlikely that will happen now, given what is happening globally. They probably will want to pause. And they're pausing for two reasons. One, to be able to digest the impact of what is happening now, and also to be able to keep, if not attract, the capital we currently have. Because cutting now means you're essentially just telling them, things are not looking good, you may leave. But that's not what we want to do. So they probably would, pause, and people are then going to reassess it and say, okay, are these yields in Nigeria sufficient or not? But I think that that's probably what we're going to see. But what would then determine whether we get maybe FDIs in this case now would be some of the incentives that the governments are going to put in place to attract those capital flows into this area. And I think beyond talking, the African governments need to do a lot more now, because what this has taught us, and we saw some of that happen when COVID broke out also, that if you're not ready, you need to do the work ahead of any of this sort of crisis. Because if you don't do anything and the crisis hits, you can't really respond. So it will be important for them to start to think about this thing, at the high level and do those things. Yes, last time to do it, well, maybe it was 5-10 years ago, but the next time is to do it now. So that way you build that capacity so that if there's any shock, you can still sort of weather it.
I'm also aware that FSDH has also partnered with a lot of development financial institutions providing long-term capital loans, finances to a lot of organizations. So what should we expect from the bank in the next few years in terms of being able to partner with a lot of institutions, locally or internationally, to deploy capital to some sectors of the economy that require long-term funding? As
a bank, we're in the business of intermediation, right? We do have, like I mentioned earlier, we have relationship with quite the number of partners, both locally and offshore. Like you mentioned, we've developed over the years relationship with these counterparties, and we have lines that we can use, that we've been using to support our clients. We do have, at times like this, right? Is those relationships that we've built over the years that we then sort of ride on to be able to continue to support our clients. FSDH is well suited and well positioned to be able to support our clients, and this is something that we've done over the years. And at times like this is when you need us as your banking partner to be able to help you to weather the storm.
Are there additional support or policies you expect from them in this era to ensure that that we need about price stability, inflation, and exchange rate, that will also push Nigeria as an attractive, economy for investors to drive their business?
Okay, yes, I think one of them is what they're currently already doing, which is to ensure that the yields, Nigerian security yields, are attractive enough for portfolio investors. And in the past, these are periods where central bank would come in with some interventionist program. But the current central bank governor has been very clear about that CBN will no longer dabble into such areas. So that's where you then need to there needs to be a collaboration between the CBN and the fiscal authorities around how do you then intervene in some specific sectors that that may require special intervention because of the nature of what we have here. It's a good thing that they've reformed the markets a lot in terms of the FX market, introduction of B-Match. They've recently introduced the FX code also into the market to try and improve transparency and liquidity in the system. So, right now we don't have issues of, I needed to buy dollars, it's not available anymore. CBN just needs to sustain that and also then see how they further bring in a lot of those diaspora flows. So they've done a lot, by bringing IMTOs into the official fold. What that then does is that you've seen a lot of synchronization in terms of exchange rates. So if you wanted to buy a rate on the street versus what's obtainable in interbank, the rates are pretty similar. You may have 2-3 naira spread here and there, but that's not much. It's for CBN to continue to keep that momentum flowing so that we can continue to attract flows into the official market, so that businesses, especially small businesses who need to buy dollars, do not have to resort to the black market to be able to buy dollars they require for their business. Because remember, these SMEs are they are the engine of growth. They're the one that develop, generate the jobs. They're the one that put products on people's tables all over the country.
Perhaps the last question from me is about the role of fiscal authorities, say government in this instance, to also partner with the private sector, who are the people that will bring the capital that are required to drive the economy. So what in the area of providing infrastructure, providing an enabling environment to enable businesses to thrive, what more collaboration do you expect between the government, I'm talking about Nigeria now, between the government and then the private sector to drive economic growth in Nigeria?
I think you sort of touched on it. It's really in the area of infrastructure. There's a huge infrastructure gap in Nigeria, and the government really cannot really fix all of it, because we know that the resources are limited. But they need to continue to do things that makes such investments attractive to private sector, because private people only go put their money in projects that they are sure will be profitable for them. It's the only government that would say, oh, because I want to take development to a particular part of the country, I need to go in there first. Once I go in, I'll build the roads. That will then drive, activity towards there. So the government needs to partner with the private sector around infrastructure. They can't do it alone, and I think they should leave that illusion of saying we want to do it alone. They should partner with private sector, bridges, airports, even the electricity. So it's good to see that power generation, quite a number of them now are owned by private people. So they need to continue things like that. Also, on the other side, there are different other incentives that you can bring on board. So, for example, one of the things that they are doing with the local refiners now is that they are, again, as a way want to guarantee them supply and also minimize price
supply of crude oil.
Yeah, supply of crude oil, and also to minimize price disruption. What they've done is that they've gone into dollar for naira swap, where they sell crude to them and they pay them. Those guys pay in naira. One, they can get those products, and the fact that the government is providing the crude to them in the same currency in which they are going to sell, that then takes away the FX risk that would have been introduced into their business. We saw, there is some issue that we read in the paper between Dangote and NNPC, so it's a good thing that we're seeing that that is already being resolved. Once that is resolved, I'm sure all the other local refiners, Water Smith and all of those ones who are just coming up, will also benefit from that arrangement. So it's just something that they need to be deliberate about, so that it doesn't then cause disruption for the system and then mess up all of these investments that these people have put into these enterprises.
The final note, you think that Nigeria is on a path to achieving $1 trillion economy?
Well, I hope so.
Okay, thank you very much for your time. God bless.